bit of a loss of gravitas and ground today for the NSE. It's been doing really well over the last few sessions. What happened today?
I think having investors just taking profits, having made substantial gains in the last couple of sessions. This wasn't the rally that we were expecting. I think there's still a lot of sentiment around sort of post-election issues, and just maybe some negative sentiment around the whole AMCON and the stabilization of the banking sector.
Right, let's talk about results that are coming through at the moment. I mean, in the previous session, we'd seen a bit of a lull when it came to brewer stocks, with the exception of Guinness. How's the market evaluated their results released for the third quarter, March 2011? Turnover at 89 billion naira, a slight improvement on last year.
Yeah. Well, we think the results were pretty good. They released about 11% improvement on revenue, and also bottom line was also quite strong. I think it largely reflected a very strong third quarter, especially given that their first half results were quite weak. So they're quite encouraging, and we believe that given the momentum of Q3, they could definitely do better in Q4. So we're quite bullish on Guinness, at least from a fundamental standpoint, and I think that's what we've seen in the marketplace. So the stock, for example, has moved over 10% since the release of that result, and I think that we're still seeing a lot of interest in Guinness. But relative to its largest competitor, Nigerian breweries, I think that that stock has just been a bit stagnant on the back of the decision with respect to the acquisition of 3 of the 5 breweries recently acquired by Heineken.
Unilever is also out with their results. In the full year for 2010, they showed profits after tax up to about 4.2 billion naira. Now, they've really had a few challenges in recent years. They've needed to cut costs. It reflected on the price of their goods in the market. Is there a strategy to cut costs paying off, do you think?
Well, management believe that there's still a lot of room for them to cut costs. I think particularly with respect to admin costs, with respect to A&P, marketing, distribution costs. I think there's a lot of room for them to move higher there, especially now that they're building capacity and looking to push their products, out there to the marketplace. So I think that with respect to growth, given the capacity adds that we're likely to see over the next 3 years, I think that there's a lot of room for that company to grow its revenue and also earnings, especially since management believes that there's a lot of room to improve efficiency. I mean, especially as they rehabilitate some of their old facilities and also build new ones.
Before we discuss the President's decision to issue a slashing in prices for cement within 30 days, just your views on one of the cement manufacturers, CCNN?
Yeah, that's a cement company of northern Nigeria. It's one of the smallest cement producers in Nigeria. It's got a capacity of around about 500,000 tons. They released their first quarter earnings for 2011 today, and they seem pretty good, but I think it also reflected a weak base effect from 2010 when their earnings were down by around about 50%. So earnings for the first quarter of 2011 was up over 100%, basically reflecting that. I think that given the situation with higher energy prices, I think that definitely will pose a big risk for the company for the rest of the year. However, there are a few tailwinds, like the prospect of pushing volumes now that you have a pretty robust demand for the product, and also slightly higher pricing as well.
Finally, and very briefly, cement manufacturers have always said high fuel costs add to their cost of business, 35% import duties add to their cost of business, poor infrastructure and energy, all those things add to their cost of business. The President doesn't agree. He believes cement prices are too high and he wants them slashed within 30 days. How's the industry responded, and why is the President taking this very decisive step?
I think the market has taken that news out of context. The government, I think, or the directive of the government is more directed towards the distributors of cement and not the producers. In actual fact, the producers haven't really increased prices in the last year. whereas you've seen an increase in the price of cement at the wholesale to retail level. So we need to get to the point now where there's a lot more supply of the product in the marketplace, i.e. we see some of the capacity that we're expecting this year, around about 14.2 million, hitting the market, and also just maybe the government compromising a little bit and raising the import quota for cement. I think that's how they will go about reducing the price today. I mean, to give you some data on what the market, the pricing is, at X depot or X factory, you get cement around about 1,400, whereas, you know, at the retail wholesale level, you get it for almost 2,800 naira per bag. So it's really the distributors that are making the bulk of the profit here, and they blame it on the higher cost of diesel or transportation costs. But I think that there are also some of them just trying to capitalize on the situation.